Hey, it's Mack with PriceActionTradingSystem.com. It's Thursday, it's January 22nd. This will be our chart lesson for today. I'm actually getting this done in a decent hour today. It's been kind of an uneventful day for me. Was through trading earlier, able to take care of some other issues, and I'm back to the office earlier today than normal. But let's get the chart lesson so I can get it uploaded in a decent hour for those that like to look at it earlier and be done early like me. But actually, before I back out, it looked like it was going to be another range day, but we broke through right here, um, right around 1 o'clock or so. And of course, you're looking for a measured leg up right there. And there's leg one. Then we corrected, and the low point was right there. So you're looking for a measured leg up from there. And you see, we never really got it. We got close, but we didn't quite get there. But the upper channel line came back into play. We overshot it here, which a lot of times leads to a reversal. In this case, it didn't. I haven't played around with this any, but maybe the upper line is up here, and there's another midline, and I believe that's the case. I didn't play with it anymore in the afternoon, but earlier it really kind of fit where I had it, but you see that fits a lot better. And that's why as the day goes on and you get more price action, continue to play around with the lines and so forth, just to make sure you got it right. And sometimes they change a little bit. They may start off flatter or a little steeper and change slightly. So you want your price action to fit neatly. And a lot of people get confused when I say fit neatly. What I mean is that when prices touch that line, let me back out here. You can see right here when prices touch that line, they reverse. They actually poke through a little bit, but notice how all the closes are inside the line, and some of the reversals are right off of it. That same thing going up here. That reversal, it closed. It never closed outside that line, or it bounced right on it. It might poke through, and but that's what I mean by fitting neatly. And see, it didn't quite. It might have been over just a little, or maybe just a tad steeper. Um, but that's what I mean. And then notice off the top, every time it touches the top, it holds, and that's fitting neatly. If it's, let's just use another example here. If you got your line like that, you can see that prices fit in there pretty good, but notice they're not touching here and they're turning down, they're turning up before they touch. Um, Prices aren't fitting real, that's not neatly. It's close, but it's not close enough. Um, I would say this is more like this right here. And this is a skill. You'll get better at it. And you can see that. Now that's holding prices neatly. When it touches, it reverses. And if it pokes through, it still closes inside. You can see that now. I mean, that's what I call fitting neatly. So there's a little bit of a difference. And even though the other one was close, it's not exactly what we got here. So you got to work on that. And you can be, a lot of times you can be close and not be perfect and still get to the same place, but not always. And so you got to pay attention. But let's back out and go back over to the start of the day and go through the trades. And we're almost done. It's a short week with a holiday. And it's been another really good trading week. I mean, I've had an incredible month, probably one of my better months ever. Last week was probably one of my what is my best week ever, but it was one of the best in a long time, because pretty much now when I get to my target, I quit. I don't hang around much anymore. Um, I'm always looking for a reason to take a day off these days. It's more like a job these days. So I still love what I do, and that's, and I don't see that changing. But when I get a chance to take a day off, um, I take it these days. And I suggest you do the same thing. Don't burn yourself out. Don't be so eager to trade that you force yourself to trade, and because it never works out in most cases. You end up wishing you had have traded in the end, and I learned that the hard way. So um, take it from me. You don't, when you get a chance to get a day off, take it. So Anyway, let's talk about the trades. Um, we've been working down, and here there's a shorter term channel here. I don't have it marked, but there's a short term one right here. Prices are kind of working down here. We overshot it there, and that generally that will lead to a break on the other side. You can see that a move to a new low, and then we corrected. Um, but if of course, you had a line. Originally, I had a little lower here, but I ended up moving it up but it's off those first two swings, and that ended up holding prices all the way down. If you copy it and move it down, it fit down here. Um, and it would have given you this reversal almost perfectly right here where to exit if you were trading. This all triggered before I got in here this morning. There's actually a short there. I think that's in after the 7 o'clock. Yeah, let's go ahead and mark it because normally I would be here and trade that and probably take that trade. That's a nice setup. But notice the new low, pull back first entry, pull back second. It's a second entry short. Um, there's a downward trending channel, and we got a break of it. And you know you're probably going to get a retest down to the lows. Um, only thing that might have made that a little questionable is the EMA is a little bit flat, and there's a lot of overlap there. But even if you look at it like that, it's a failed break higher, so there's another reason. I don't have my line. We'll just draw a little quick line here. You can see, just to make it clear, I always preach about the lines, and sometimes I don't have them on there. But if I'd have been trading, I would have had it, and a lot of times I'll have them and remove them, and then I forget to put them back on. Um, but anyway, you can see that that's a little trading range. We did get a little failed breakout. I would have probably used a limit order on that entry, let it break lower, and then drop a limit order. It wouldn't have mattered. It just took off. But you never know when it's going to bounce again. But we were working down, and the fact that prices, there also is a failed second entry long there. Notice this new low. We failed out the low side. Move up, pull back in your second entry right there. And it's a second entry short off counting with the lows, with the movement down. There's a little failed tick higher right there. Creates a little trap, and those generally will create. Somebody asked me about runners, saying so many of them fail. Uh, Most of your best runners are going to generate off the trend lines and it's strong support and resistance in those traps where it breaks out of a high and reverses. And look at that move. That's a good one. And the best ones a lot of times are at the lows when you get one that breaks out um, and takes off. I don't see one today, but here's one. I guess you could say there's support across there and it breaks lower. And look at it go. But that's generally your best moves. And look where all your big moves come from. They're off this trend line or a shorter term right there. Look at that, off the trend line. This was after a break of the trend line. That's where they're going to come from. And so if you try to pick and choose between runners, generally you're going to miss most of them. And you're never going to get it right trying to pick and choose. But if you want to try to pick and choose, your best bet is to just try to get the ones off the strong support and resistance, the traps, and off the trend lines. Strong support and resistance can either be an angled line or a flat line. So here's one, a little trap. It's also off that trend line. But notice what happened. This little congestion, it broke higher and failed, and then it just shoots straight down. You actually had a little breakout pullback short there too. But that's where all your best ones are going to generate from. And so if you're trying to catch a runner, that's a good spot. But anyway, your first trade was right there. Um, if you were trading, started around 7, and then we're of course moving back up towards the trend line, and you get a setup right here. It never triggered. Well, it did trigger. It didn't trigger low here, so I still like going short there because it's right off that trend line. But if you waited, You actually could have waited for this bar and let it break lower and drop a limit order in, and you could have got filled all the way back up there, maybe one tick back into that bar. So you might have saved your, well, maybe not right at that bar. So you could have saved a tick on that uh, by being a little more patient. But a lot of times these things take off like so, and you don't get another chance. So you got to be careful not exiting them. But then you get another little bounce, and you got a little break outside. But you got to figure on a two-legged move down like that, you're gonna do a little. You're probably gonna try to test this again. And this may not have been a clear break because people, you know, it's real close. It could have been up there. It doesn't really give you the first two swings that way. Uh, so it's a little bit questionable, but it's so close that people are probably going to wait for, or going to continue to think short until there's a clear break outside. Then you finally get one here. So even if it's there, now you got another one. So it's no doubt now. Um, but let me move this out of the way. There's a nice second entry short there. Notice the move up, first entry, pull back, second entry. You get a nice bearish bar. It didn't close right on its low. So again, you might have thought about a limit order, but I just put a stop there because there's a good chance we're coming here and maybe even make, probably going to make a new low. So there's a lot of room to move there. So I like that one. That was a great trade. Um, there's a failed second entry long right here, but it's too big a move away from the EMA. It's right at a double bottom. So wait and see if you get a second entry, and guess what? You do right off the trend line. And it breaks higher above a little double top, so it's that little trap I was talking about. And if you didn't enter there, you probably could have considered entering here, but when it bounced right there and came back, I would have been hesitant to go short there. But it is right off the trend line, so I'm going to go ahead and just make it green. I think it's a little more aggressive because it's right into a double bottom in the low of the day and all that. But it is a breakout pullback short. It does turn down right off the trend line, and it turns out to be a pretty, really nice move. And I would have been thinking a couple of things here. I would have been looking for a measured move here, which gives you to right here. And you can see that we came within a tick of that. So that would have also maybe led you to want to enter that again right there. Just a thought. But even without that one, I would have measured this one and looked for one here. And that would have given you a little further. We didn't quite get there on that one. Well, actually, we did. We bounced first and got a break first. But, you would have been considering that as well if you're still in the trade. And then notice the pullback, first entry, pullback, a nice second entry. It broke higher first and turned down. I love those. Just go short right under that. Boom, and look what it does. It takes off again. And oh yeah, the EMA is another support. It acts just like support and resistance. So you can use it just like a trend line or just like strong support and resistance when prices are continually bouncing off of it. So don't forget that one. And then we got another second entry short right here off the bigger channel. Notice pullback first entry, pullback second entry, and again it broke higher. It didn't go out the lower side, but when prices broke lower right there, you could have used a stop, but I probably would have used a limit order on this one, just try to get a little better entry. And then when we bounced right off that little, those first two swings right there, that confirms that. You really could have gone long right there too. I didn't mark that one, but I'm going to go back and mark it. The reason I didn't necessarily like it originally was because there's a doji there, and that's still an inside bar. But looking back on it, that confirmed that it's a failed second entry. It's not really a failed second entry short, but you can treat it like one. I mean, it's so close that you could almost even make it blue. So I'm going to go ahead and mark it. I want to say green, but it's really, really close. Definitely a green, and it's like borderline, just being a good setup. So. But I was still thinking short, so I kind of missed it earlier. But looking at it now, Even if you're only looking at it to right there, still looks pretty good. So I like that one. And then now you're back above the EMA. You've already had your break. You've had a couple of legs down. You've had a measured move down. Um, and everything's back above the EMA. And look at, you get a first entry pullback and second entry short, and it bounces right off that trend line again. This was just one tick away from being a really bullish bar, but you might have thought about letting it break higher and then putting a limit order right there, maybe a tick back in. You don't want to fool around and miss a trade like that. But look what happens. Boom, and it just takes off. I mean, it never really gives you another opportunity. If it would have ticked lower right there and bounced off the trend line, you could be thinking failed second entry short with a trap. Um, but in this case, you wouldn't have had this bigger channel yet. There wasn't enough price action to find it really yet. Um, so you just had to use the shorter term one here. But I like that one. And I wasn't sure if this was going to be the upper trend line or if it was going to be a midline. But when we shot on through and bounced off of it, now you got to be thinking midline. So just wait on the setup. There's actually a second entry long right there, but it was right into that double top. So I didn't like going long there. I think you needed to wait. And then you get a breakout pullback entry right here. But also, it's a failed second entry short. And it's a pretty nice one. I would have fooled more people if it would have broke below that bar. But it might have moved a lot further if it would have broke below that bar too, because more people might have jumped in. But it's still a failed second entry short, a breakout pullback long, and we're looking for prices to go higher. And so I liked it. Turned out to be a great trade. Even though it hesitated a minute, it turned out to be a really good trade. And then you just kind of, and there's actually a short-term trend line there I don't have on there. And you can see that working up through there. But you got another bounce. You actually had a bounce of it right there. But the reason I like this one is because you try to go lower once, and then two more times, just like that double test rule, and you couldn't go lower. So this thing's going to go higher. And you're actually thinking that prices are going to come back to this high over here because that's where the range is. And so this turned out to be a really good trade right here. And then prices get up here and kind of top out and make a reversal. And there was a little break of this one right here. And that was another reason that I was hesitant to enter long on this one. But when you got the little double test rule, I liked it. And it was really tempting to go short right there, but I think you got to wait on the second entry, but it doesn't come till way down here. So, and that's right into the EMA. So I didn't like taking that one. Turned out to be a great trade, but I didn't like it. And then it set up here, and I was tempted to go short right here. And you know, the smart side trader of me says, no, look at all that overlap. Just wait. You'll probably get a better opportunity in a minute. And then it shot up here. And it gave you a second entry short here, but I didn't like that one. I thought you were better off to wait and take a second entry counting off the high. And there was a little trend line working up through there, and we got a break of it. It just didn't last very long. It got a real quick break, but you can see it fits real nicely right there. We just got a break real early. But I still thought, you know, hey, maybe it's two-tiered. There's always a chance it's two-tiered, so you need to kind of wait and make sure. So I didn't like going short there. And then suddenly it comes down, and it comes back to this little trend line. And when it breaks lower right there, that was a great setup. There was a little bit of overlap there, but I would have liked it better if it would have broke higher and then turned down, going short right under it. But I went short right there anyway. And just as I was doing that, another trader was asking me if I thought that was a good long right there. And my reply to him was, no, I think you were better off to wait and see if you got a better entry. And you did right over here. And this was a real quick scalp, um, and it pulled back. You didn't get a runner here if you were unless you were using the original stop, but it gave you another chance to enter right there on a second entry. So you could have entered either one of them. I actually entered on the first one, and it still was a good trade. I mean, I was in and out just a couple of seconds. It didn't last long at all, but it bounced real quick, and then it gives you the other opportunity to get in, and that one moved a little further. So there's actually two trades right there, even though that's the reason the circle's so big. Let me just circle each setup, and that way people know what's, in case somebody comes back to look at it later. So there's actually two trades right there, and I entered on the first one. But this trader asked me to talk about that, and and once you got this move down, measure it and look for a measured move here, and you see we came within maybe 2 ticks. So we didn't quite get it but the problem is we found strong support across here. So always look for those measured moves, and if you got in that one, once you got that little doji right there and it broke higher, I probably would have exited right there. But if you exit a tick or two in front of it, you may have got out anyway and wouldn't have to make that guesstimation. And you got a break of that channel right there. So that's two, and there's 2 legs down there. Not only was it almost a measured move counting here to here, but then you also want to measure this one and this one. You can see that's really basically a perfect measured move there. And then we got a little 2-legged correction. This is a second entry long. Notice that swing high, pull back first entry, pull back second entry, and it's right across that strong support area right there. And notice that little trap. You know, it moves up and it breaks below it and then turns up. I love those setups right there. There's a failed second entry short right there that was, with that double top right there, and this being everything been below the EMA, I was hesitant on it. You want to try to get in only at the lows. And the bias we traded up into this, so the bias is, you could say we traded down because we corrected a little bit, but with that upward bias right in there, I feel like we really traded up into this little channel. So the odds are when we break out, we'll probably go higher because there was an upward bias. But then you get another little 2 legs back and another second entry long right there, right off the low. And it's real close to that trend line, close enough to say it probably was at that trend line. And then notice that little trap right there. You know, it was tempting to go short there, and you probably could have. I didn't mark it. I'll tell you what I'm going to do. I'm going to make it green, because if you're paying attention and you're just scalping away, you're probably going to want to risk that one. So I think it's at least an aggressive short there. It fits the rules because you got that little trap and it is a trading range. So there's some reasons to go short there. There's plenty of room to get back to the other side, even room to get back to the trend line. And guess where it bounces? It actually pokes through, but it never closes below it. And then it tries it again, and then there's that little trap again. So you really could have gone long on either one of those, even though it's better to wait, because there's really a second entry. Look, counting off that high, pull back first entry, pull back second entry. So, and then you get the trap on a second entry off the low. So you could have used either one of those. And I probably, if I would have entered here, I would have probably added on right there, hoping to get at least 2 scalps back before we got to that high right there. But now that this trend line's holding, we're probably going to go higher than that. And notice that's exactly what happened. So then we break through this resistance here, and look how it's acting as support. It tested it once, and then it that little double test rule, and then you got a nice bullish bar. You really could have considered going long right there because you know, the double test rule and the fact that it's right off a possible trend line, a little shorter term one. But definitely when you got that bullish bar, just go long above it. There's another second entry long right there. You got a high, pull back first entry, pull back second entry. Even though this one a little higher, it's close enough. But I don't like that one. It's right into that resistance. There's a lot of overlap, too many dojis. So even though it looks really good after the fact, look what it looked like prior to the trigger. I mean, that's scary going along, because usually or a good chance of might happen is it ticks a tick or two higher and turns straight down and traps you. So I don't think you can go long right there. I think you got to watch that one. And then you get a little repeat pattern that looks better than this one. And that's what I'm always saying. If you'll just be patient, you'll get a setup. And this is almost a repeat pattern of this, except there's not as much overlap, and you got a little more color in there, and you get a nicer bullish bar, and you're not going long right into that resistance area across there. So you're actually bouncing off the support area of the trend line. So that was a nice setup right there. And then there's a failed second entry short right there, but you've been bouncing off the upper side of that trend line multiple times. So I don't think you can go long there, and even though it would have worked, and you just kind of get hung up here. And that gets you well into the 2 o'clock hour anyway. So another really good trading day, lots of entries here. And just remember, you only have to take 2 or 3 of these trades a day to make a decent living. Um, you don't have to, people come in here and they think, I'm a day trader, I got to take every trade I see. Well, the more trades you take, especially if you're not being patient and waiting on the best setups, um, you're gambling more. And when you start gambling, you start losing and you lose money. We don't want to gamble. We only want to take the high probability trades that are in our favor. It works very similar to the way the casinos do. They don't win every hand. They don't win uh, every time that they deal a hand of cards at the blackjack table. They only win. They only have about a 1%, 1 to 2% advantage. So that means they win 51 or 52%. But that's all they need to make millions of dollars. And that's so all we need is a slight advantage, just like the casinos do. But we can get a lot better than 51 or 2%. When you get really good at this, if you can just get to 65 or 70, you can make money if you follow the rules. But anything above that, it starts to get pretty, fairly profitable. And people say you can't do that. Well, I'm here to tell you that if somebody tells you that, don't listen to them, because I know multiple people that do it every day. And I see their results, so I know they're not making it up. Um, it can be done, and the longer you do this, the better you'll get at it. Um, doesn't mean you won't still make mistakes. It doesn't mean you won't have losing trades, because that's all part of what we do. But it does get easier, and you will get better the longer you do this, in most cases. So, um, but anyway, we're already about 30 minutes into the day. I'm going to get this uploaded so it's done in a decent hour today. And I hope you had a good trading day. Um, it's been a great month for January, and I just hope it only continues. So we're already back to halfway to 3,000 again. Um, I mean, just in today we went from 219 or so as the low of the day to 259. It's another 40-point move up after a 26-point move uh, to the low side. So it just doesn't get any better than this. And so be thankful it's like this now, and let's hope it continues. If it doesn't, we'll still make money. It may not be as easy, but we'll still make money. That's why I love the ES so much. Is it's really very predictable. You get nice moves like this, and it's easy to if you understand what's going on the chart in front of you, it's fairly easy to understand what's going on and where prices are going shorter term. And so I love this market, and that's why most professional traders trade it, is because the volume is very high. It's sufficient to trade very large numbers. People will ask me from time to time, can I trade 10 or 25 contracts, safely? Yeah, you can trade those easily. I'll go as far as to say you can probably trade 100 contracts during regular trading hours, and rarely, if ever, will you even get one tick slippage. There's just that's just how good the volume is. And, I can't, seems like one time back, the last real strong volatility, when we had some really strong volatility back in the fall, Seemed like one day I got some crazy slippage. I don't know what happened. It was just a one trade deal, and I got some slippage, and that was the first time I can remember ever getting any slippage. And I think it was just the volume was just really low, and things were just kind of slow then. And but that's the only time I've ever remember getting even a tick of slippage. So yeah, you can trade 100 contracts probably safely and not worry about slippage during regular business hours, regular trading hours, I should say. Let me clarify that, because if you're trading overnight, I wouldn't say that. You can get some slippage in the overnight. So, but anyway, I'm going to wrap it up. Enough of my rambling. This is Matt with PriceActionTradingSystem.com, and we'll see you next time.